active and quite strong in policy advocacy. This evening, we have an array of eminent panelists from the industry. We thank and welcome each one of you, sir. I welcome Mr. Neeraj Jain, Joint Managing Director, Vardhman Textiles. I also welcome Mr. Atul Ganatra, President, Cotton Association of India. May I welcome Mr. Dharmendra Goyal, Managing Director, Sridhar Kotsin Private Limited, and Mr. Anupam Kaushik, Senior Vice President, Olam International Group. It's time for me to also welcome the moderator of this session, Mr. Sanjay A. Jain. As you are aware, he's the chairman of the ICC National Expert Committee on Textiles and the Managing Director, TJ Limited. I'm sure you will find the session very, very engaging and enriching. Before we formally begin, just quickly share two thoughts with you. The question and answer can be taken at the end of the session. However, you can place your questions in the chat box or at the end by raising hands to enable us to unmute the speakers. Over to you, Mr. Jain. Thank you.
Thank you. A very good afternoon to everyone present here. A special thank to all our four esteemed panelists. I must say they all agreed just on one WhatsApp message. So special thanks to all of you. I didn't even need to call you. So that shows the passion and interest to support the industry and always be ready to guide the industry. It was just a few days back that some of my friends from the garment industry told me, Sanjay ji, you are aware, you are in touch with cotton and yarn, but we as garmenters and hosiery people, hame koi idea nahi hai. We have no idea of what's going on. We keep getting all sorts of news and it's very difficult to configure and understand what's going on. And this story has been there for over a year now when cotton and cotton yarn prices started moving after a gap of about 6 months after the first wave of COVID, somewhere in October, November 2020. And the industry, I'm speaking on behalf of the value-added industry, always kept thinking it's just a blip and it will again come down. And they actually haven't been able to catch on. They've always been left behind. And wherever they try to get aggressive after having missed the bus a few times, they suddenly found for 2-3 months there was a lull and prices didn't go up after last year's May, June. And then again, suddenly in September when everything seemed down and there was a sort of a correction in place, suddenly without any warning, everything just went up and by 20, 25, 30 and up to even 50 rupees a kg, unprecedented. So I know it's a puzzle, it's a question mark in everyone's mind. Ki what next? Should we cover yarn now? As most of our audience are from the value-added industry. So I request our panelists to also just keep that in mind that they need basic guidance because they are very perplexed seeing the way things are going on. They don't understand the way cotton and yarn people understand ICE, MCX, what's happening there, what's happening globally. They just feel that the domestic demand is weak. So why are prices going up? Which is a fact. Due to this unbridled inflationary pressures, we have seen a slowdown in demand all across in the last 2-3 months, due to which the worry is even more because industry does not have working capital to buy yarn at such a high price. If I'm not wrong, prices are up by about in cotton yarn in the last 15 months by more than 60 to 70%. Cotton is 100% plus on. And fabric is obviously follows yarn more or less with a lag. So today we have with us 4 top experts from the country. And I won't say only from the country. I would say from the international domain, from the global industry, as India is a proud leader in the global industry, who understand cotton or yarn or probably both very, very well. Are well equipped to know what sort of statistics, what are the data points, what are the real movements happening behind the curtains, which most people as garmenters are unable to know, or even a lot of spinners don't understand. So I'd just like to formally welcome with a one-line introduction, though the speakers don't need any introduction as such. We have with us Neeraj Jain, who's joint managing director of Vardhman Textiles. Vardhman, I think so, is a name which needs no introduction anywhere in the country. They are probably got the largest spindlage in the country. Neeraj, you can correct me if you're wrong, about 12 to 13 lakhs. Or you plan to even cross that.
Yeah,
You plan to cross that. Huge capacity now of woven fabric. And they sell not only everywhere within the country, all types of yarn, also all across the globe. A name synonymous when it comes to yarn anywhere in the world. Then we have with us Atul Bhai, as I call him, Mr. Atul Ganatra, another very close friend, who is the president of Cotton Association of India. And more than the president of Cotton with the hat which he's wearing now, he's one of the largest cotton traders. I think so, goes beyond one generation in the cotton trade. And anyone who's into spinning would have at some point of time had some business with their cotton firm. So thank you, Atul Bhai, for joining us. We have Mr. Dharmender Goyal, another close friend and who I've always been impressed by his in-depth analysis. We've probably had more discussions in China than in India, where we've been able to share and the same dais. And he is one of the largest cotton yarn exporters and also raw cotton, if I'm, correct me if I'm wrong, Mr. Goyal. And he understands, more important than the volumes he does, he understands how the markets are moving. He has his fingers on the pulse of the global market, which I think so all of us would love to know. And last but not the least, one of the cotton giants of the world, Olam, who's not only into cotton, into multiple commodities. Mr. Anupam Kaushik, a very senior person, senior vice president in Olam group. And if anything, you want to know what's happening anywhere in the world globally, Olam has his finger into all the pies anywhere across the world. So welcome to all four of you. And we'll be having an open, candid panel discussion. And then we'll follow it up with some questions from audience. I request it's better if you can put it in the chat box so that we don't repeat questions and we can have a very directed and focused discussion today. And I hope all of us will go definitely more enriched, more educated, if not about the trend, but also what are the things we need to look at to understand the trends in the days to come. First question is to Mr. Neeraj. Mr. Neeraj, we wanted to understand this sudden rise which has happened. Of course, there have been many rises in the last 15 months. The last spurt bull run which has happened, which has taken cotton by about 10,000 to 12,000 rupees a candy and has been followed by a steep rise in yarn. How do you see cotton yarn demand going forward domestically and internationally as against the last 3 months?
So till now, the demand has been quite good. But at the same time, the way prices are increasing, I think there's lots of pressure coming from all the brands where they are not in a position to pass on these prices. Till now, they have been riding on by cutting the discounts which they used to give earlier. And also the average price of yarn was still reasonably okay for them. So I think they've been maintaining these volumes. But going by the prices now, it looks like there can be definitely some drop in the demand, especially for cotton yarn, which could be substituted either with the polyester cotton, or something mixed with the viscose or something to do with the synthetic fibers. So per se on these prices, I think the kind of resistance which we are finding, there could be a possibility going forward, 100% cotton yarn, the demand could be shrunk.
Thank you. I think so. Very open and candid admission from a spinner himself. Neeraj, because you're also in the PC yarn market and you're sitting in Ludhiana, which is the hub of the nation's PC, do you see already a shift of consumption moving to PC and increased demand on that side?
Surely, yes. So if we look at both domestic as well as international market, the PC demand last 6 to 9 months has been quite good. Most of the brands which they were on a 100% cotton yarn, they have definitely introduced polyester cotton also in their product basket. And my belief is once they have introduced a new product line, whether the prices of cotton comes down in the next season, I think any line which has been started, there's a kind of some permanent change which would happen because they are not likely to close those lines going forward. So whatever demand shifts happen by way of a new product range, I think that's likely to continue. If you look at, I just want to give you one example. There was a time about 8-10 years back when the acrylic prices have gone up very high. At that stage, all the mink blankets, people started converting into the polyester. And after that, the price is corrected. But at the same time, since polyester was far cheaper, I think that demand got permanently shifted. So there could be possibility that some of the product lines which are introduced on the, especially on the polyester cotton, will continue, and 100% cotton to that extent may have some impact going forward.
Yeah, thank you very much for this insight. Moving on to Atul Bhai. Atul Bhai, the general thing is yarn is going up because cotton is going up. So, what's your view going forward? How do you look at cotton? Today also, it's very funny. MCX was up by 1,000 odd points yesterday, and today it's down by about 600, 700 points. So we are not getting any clear direction. If it's going to go up, then at least the value-added end user can sit at peace and say, okay, now I need to buy it. Let me buy on, because summer season in India is very big. So everyone is confused whether they should buy now or they should wait for 15 days before really committing to buying in big quantities. So what's your perspective on cotton?
Good evening to all. First of all, because there are few reasons of cotton going up. Number one reason was spinning mills were having very huge profit by converting cotton into the yarn, which has now reduced. One time of I have seen cotton was at 50,000 rupees and 30 combed yarn was getting sold at 330 rupees. Today cotton is at 75 to 77,000, and I think today's 30 yarn is getting sold at 340 or 345 rupees. So what I have seen is the spinning mill's profit has been diverted to the farmers and the stockist of the cotton. So spinning mill's margin has been reduced and the farmers has got that money, and the stockist who has done the stock of the cotton, they have got the money. Now, this is the one main reason why the cotton prices has gone up, because spinning mills were having profit. So they kept on buying at every rate. Prices were going up, then also mills kept buying. Next reason was the farmers. Last year, farmers were getting rupees 5,000 rupees or 6,000 rupees maximum for their cotton. This year, they are getting 8 to 10,000 rupees. So even if they sell their 50% of the product, they are recovering the money of the last year. So today, the biggest stockist is the farmer. We believe today around 150 lakh bales raw cotton has been stored by the farmer, and they are selling very slowly. This is also one of the reasons why the prices has gone up. And third reason is, as I told you, there is a ice also market has gone up from 90 cent to 120 cent. Ice also price has gone up. These are the few reasons. And as you said, MCX today 1,000 rupees morning was up and now 1,000 rupees down. This is a speculation going on in the exchange, where many suggestions to the ministry and everything is gone. I don't know how government will control such speculation, 1,000 rupees. As you said, spinners are worried, buyers are worried, traders are worried. With this all speculation, everybody is under pressure. And this is regarding cotton and cotton yarn. Sir, before 2 minutes, you were asking to Neeraj ji. Today morning in the morning walk, I was talking to one of the viscose, very big, India's second largest viscose manufacturer. So he gave me a surprise. He said, last 10 days, we are selling our viscose to the spinning mills. Then I said, how come? He said, each and every, most of the mills, leave few mills who are very branded or anything, they have started mixing 2 to 5% of viscose in the cotton, because if you mix 2% or 5%, nobody can catch, he said. And viscose is today at 170 rupees kg against 225 rupees. And mixing 2% or 5% viscose, cotton yarn quality also gets improved. That is what he told me. And many spinners I have spoken last 3 days, they are shifting in South, mainly I have seen they are shifting to PC yarn, polyester cotton yarn, 80, 20, 70, 30. And that yarn cost is also less. So demand of that type of PC yarn is also increased. So this was some news for you, which I have heard today. So if this will continue, we can see 10 to 15 lakh bales cotton consumption, which we were expecting will go up this year. It may reduce also if price will go continue like this going up. Yes, Sanjay ji.
Yes, thank you, Atul bhai. Just wanted to make, I know you're a cotton person. So before someone starts messaging you to sell him cotton, 30s cotton at 345, I'll just clarify to the audience that cotton is definitely 30s combed is at anywhere above 360 plus X mill. And there's obviously a range based on quality and mill brand. But definitely not lower than that just now. So please don't disturb Atul bhai कि 345 में कहाँ से आप ध्यान दे रहे हो. But still, the fact is well taken. Spinners are getting squeezed as against what was happening about a year back, a few months back. And secondly, the shift towards PC, and this is a new thing, mixing viscose with cotton, of course, interesting. And Indian spinners are always ahead in finding new ways out. But it's going to be very interesting time, South especially, because there's a high freight rate also on cotton. How the Anupam ji, are you there? Okay.
Yes, Jen sir.
Yeah. Olam, of course, you know everything that's happening globally. And I'm not asking you just from an Olam perspective to sell more cotton, but Anupam ji, at these prices, considering the world's balance sheet and the way cotton is there, and you obviously also do your own research about who is holding how much. How do you see globally? Do you see more bullishness from this level? Because we are still in the, as I said, almost at the peak of the Northern Hemisphere cotton.
Sanjay ji, I'll split my answer into 4 components, which will clarify the current prices and provide a kind of a logical context to it. My first statement is that of all the dollars that US has printed since the beginning of the US dollar, more than 80% has been printed in last 22 months.
Okay.
More than 22%. So on January 1st, the US dollar supply was around $4 trillion. And in the month of December end, it is somewhere around close to $21 trillion. So when you flush the world with this kind of a money printing, and when you start distributing to people without working for supporting their spending and their life systems, whereas the world is not able to produce. So there is a reduction in the marginal production and there is an increase in the marginal demand, which has created imbalance across the commodities, and cotton is not an exception. If you look at the commodity index, if you look at all the agriculture commodities, I think cotton will figure somewhere below 15 or 16 number in the overall list of commodities that have gone up in last 22, 23 months since the onset of pandemic. So that is the first thing. Unbridled money supply, distribution of money to people to support their life systems, reduction in the marginal production, and reduction in the flow of goods due to various constraints at the ports and logistics, and we all know that. It has created a kind of a picture that this is a squeeze on supply. So I think I can make a statement that cotton is well supplied but not well available. So that is one clear thing. The second factor, which is again we have to look at the context. For last 20 years, this China was supplier of deflation to the world. China was using its currency strategy and the interest rate strategy across the merchandise and goods and products. It was supplying deflation, or it was keeping the inflation kind of constant and appropriating the market share in everything that they produce or they have capacity in. What has happened that it has created significant imbalances within Chinese own financial system, that they can no longer be a source of the global deflation. And as soon as China realized that they cannot be a source of global deflation, the world inflation started creeping up, supported by the unbridled currency printing across the globe. And it got worsened by the pandemic. So that is the second factor because of which all commodity prices, and particularly in where China was dominant, the prices simply kind of took a revenge adjustment in terms of inflation. So when China stopped exporting deflation in textile, the inflation caught up. I mean, just to look at the numbers, you have been in textile longer than I've been into this industry. In 2013-14, India was producing close to around 40 million bales in around 12 plus million hectare at 40,000 rupees a candy. If you simply take a 6% annual inflation, the nominal price of cotton comes to around 80,000 rupees. Whatever inflation, if you apply to every component of your consumption, you should apply the same to cotton, and its fair price comes to around 80,000 rupees a candy. 6% CAGR, more than 10 years. So what I'm saying that what is happening is a structural thing that China removing themselves as a source of deflation, supported by a global money printing, and it is affecting everything. So cotton is not an exception. So though we are affected by cotton, that's why we are more concerned. But I think that it is a very normal phenomenon. That is the one thing. It is well supplied. As the logistics constraints start going away, we will see the availability becoming more visible. Like we will see sometime in 3 months time in Africa. Australia, for example, there is no freight available from Australia to India, and it is one of the best crops in recent times. Africa, the shipments are pending since October, November, December, and most of the merchants are not even offering anything for Africa because they don't know whether they will be able to ship or not. So it is well available. It's well supplied, but not well available. So we will have to wait till this imbalance goes away. Now, coming to the prices, if you see that Indian cotton prices have simply followed what is happening in ice, kapas prices have gone up by 61%, and ice prices have gone up by 62% from December 1st, 2020. So there is nothing extra that has happened, and obviously the spinning has been the pass-through. The clamor that we have been hearing, or the noise that we have been hearing, is mostly from the downstream people who looked at a price and fixed their garment supplies 3 to 6 months down the line, which should not have happened, as all of us know that the spinners do not sell anything more than 30 to 60 days forward. But whereas garment guys have sold, and they got squeezed because of this 60% rise in the kapas prices. Now, coming to the point that Atul has mentioned about the stockist, if we look at the commercial carry outside the mill system and farmer system, it is lowest in 10 years. The range of the commercial carry has been between 33 lakh bales to 160 lakh bales in last 10 to 12 years. This year, the commercial carry is around 36 lakh bales. So it is close to the lowest ever. So the point here is that there's a genuine inflationary boom, China plus one strategy, logistics mess, cotton being available, but not cotton supply is there, but not being available for prompt shipment. And this entire complex has created a scenario that maybe some segments are profiteering, which they are not. Even today, at the current prices of 10,000 kapas, you know that you can do it verbally, that ginners are making negative margins at these kind of kapas. And that's right that the spinners have got a squeeze on their margin, but nonetheless, even today it is profitable. So I'm sure that these things will gradually kind of go away, but it will have its share of pain.
Thank you, Anupamji. If I can carry from whatever you just now said and summarize it, there's no dearth of cotton in the world. It's only due to a variety of reasons that it's not reaching the right place at the right time. The produce is somewhere else and the use is somewhere else, and that's why probably there's a panic, as there's no certainty of when things will match up and balance out. But I think so this also gives one point, that at some point of time, because there's no basic shortage, things will level off. Now, whether it does in 1 month or 3 months, obviously, is anybody's guess. But I'm sure these prices, everyone is must be working around the clock to get the cotton at the right place. I know Olam does a lot of work in Africa, and you must be really working hard to see how to get things to reach the use and take advantage of this extraordinary rise in prices. So that's at least some solace that we are not actually going to be seeing left with no cotton at the end of this cotton year, which is a very important fear which many people have started building up. Moving on to now Dharmender ji. Thanks for being here, Dharmender ji. We all know that cotton yarn was ably supported by exports from the new bull run which happened in October and is still continuing with a small pause. how typically, from what I understand, cotton yarn exports peak season is from October to January for summer production, etc. How do you see cotton yarn exports? Because we are seeing things slowing down. Maybe is it, I don't know if it's price related or actual demand coming down. How do you see it going forward? Will exports be able to support it the way it's supported in the last quarter?
I think first let's split what happened in the last quarter and what we expect now. In the last quarter, we had a large participation from one of our largest buyers, and that is China. Because when we are looking at October, November, December yarn shipments, we are looking actually at cotton consumption of the previous year. Because these orders are mostly booked between, I would say, August and September, when the prices, frankly, were very comfortable. And the cotton stocks were with all the mills, and the margins were good. So most of the mills, large format mills as well as small, were well sold out until end of November to middle of December. So you will see the export figures probably from beginning of the year until November show a consistent pace of around 110 to 120,000 tons. That's the ballpark monthly shipment figure. But come by end of December, most of the Chinese orders were already executed, and now we were feeding in the other markets. Right now, I would say the order book is fairly slim for most mills beyond 30 days from now. And with the current prices, like Neeraj ji also mentioned, there is such a huge pressure that it is near to impossible to get these prices down into almost all markets. So if I combine this with what we have a scenario on cotton, there is going to be a huge resistance for mills to accept the lower price ideas coming in from the markets. And at the same time, the pressure of cotton prices likely to stay high is going to force mills actually to look more inwards into the domestic market rather than exports. So as a combination, we are going to see a very choppy kind of a business as far as exports is concerned. And I look at it that exports practically will come down by at least 15 to 20% in the next quarter.
Thank you. Very insightful, which I think so all the four speakers have indicated, and I think so it's good for the value-added industry. No one knows what's going to happen in the extreme short term. But overall, I think so the position is such that we are not looking at, anything real long-term secular trend, which is upward going from here. Probably we stable off and cool down. Anupam ji, would love to know what's your view on take if import duty on cotton goes away? Because this is a big question and a big demand. How do you think it's going to have an impact on Indian cotton prices?
So my sense is that Indian cotton prices are not yet trading at the import parity level with duty. Indian cotton prices are still kind of indicating that they are factoring a duty reduction. And I think government will take cognizance of that when Indian markets are there is no restriction on export. Same way there should be a facilitation to a absolutely unrestricted access for spinners to the international cotton. So I think government is cognizant of the fact, but it is not going to make much of a difference, because what will happen, that Indian cotton and international cotton landed basis will trade in parity.
Mm-hmm. So you don't think any major respite is there, even if your import duty is removed on cotton as expected by users?
It will depend on where does the landed prices of imported cotton prevail at a given point of time, driven by where the New York is or the competing crops are. So the Indian cotton prices will simply be trading at parity with the landed price, depending on where the market is.
Mr. Goyal, have you seen any movement for spinners to move in and contract imported cotton in anticipation of import duty going away in the last 1 week to 10 days?
Yeah, there have been a lot of mills who are seriously contemplating buying. Some of them, in fact, I hear, have also contracted large quantities for imports in anticipation that this duty is going to go away. And even but mostly the larger format mills have contracted. I think keeping in mind either availability of a particular quality of fiber, and or if it is to feed and export, they could very well take authorizations and import it duty free.
Atul bhai, if you think import duty goes away, how much cotton do you think could come into the country?
We are expecting 15 lakh bales will be imported without removing duty.
Okay.
But if the duty will be removed and Indian price will stay at this level also, we are expecting 25 lakh bales to 30 lakh bales will be imported. That is what we are thinking. Because if duty will be removed for particularly for the South mills, the buying imported cotton is a one kind of advantage. And there is a 3 to 5% realization also is higher in the imported cotton. And also advantage is if big mills of the South, they have already covered a cotton April, May month they have covered. Those who have good finance available, they covered cotton. So now if they want June, July, August, they can wait for cotton to come also and there will be no interest cost to them. Today at this price, higher price, if they are keeping cotton stock for June, July, there will be another 5,000 rupees cost will go up higher. So they can do import also. I think import will increase and most likely the duty will be removed. Today also we have taken up the to the ministry. They said it is likely to be removed.
Okay. So I think so that's good news, and I think so all pointers are that we are going to see some cooling off, even if we don't see really prices coming down in a very big way, but at least we can expect that this extraordinary bull run where every day morning you find yarn at a new level will probably fade away and you'll have more stability. Because we all know in business, stability is very important. And even value-added industry, contrary to what many may believe, at least domestically, doesn't want any big fall in prices because that also spoils the sentiment of the market. Only people, and in domestic industry, you don't have such long contracts on garments as against in exports, where we see that you are contracted for next 3 months, 6 months. So you are sort of locked in into the price, which creates chaos when you have certain big things. Neeraj, overall, do you feel cotton consumption in the country would go up, or you feel that it's going to sort of stabilize and more non-cotton based yarn would come in for the new spinnages, etc., which are coming?
So if we look at the today's consumption, current year, it will definitely be much higher than the previous periods. So earlier, if the estimation was that Indian consumption is close to about 30 million bales, this could be anything between 33 to 34 million bales estimation as of now. And almost 2 lakh spindles are being added into the system every month. So which means almost we'll be adding about 2.5 million spindles in every year. My belief, going by the increase on the synthetic side, probably the cotton consumptions may not go beyond this, and it will be more diverted towards the synthetic parts, which will also be aligned to our ratio of India, which is very averse as of now compared to the world ratios. Slowly, we will also start moving into that direction. So cotton consumption per se, even with the increased spindlage, may not increase going forward.
Neeraj, as an end user, if you wanted to give 2 or 3 things that an end user should keep looking at to get some idea of where yarn prices are going to be moving, what would you say? What would you advise the end user? Would it be MCX, ICE, or whatever?
Definitely ICE is one of the indicator, because the ICE will determine the international prices, and generally the international prices of yarn will move only with the ICE. If we look at the Indian scenario, when the Indian cotton prices were increasing and the ICE was stable, it was very difficult for the yarn prices to move outside. So practically, I think once the ICE moves, which is one indicator for the entire world, not only for India, that's one of the very important factor to look at, because then if that's increasing, every part of the world will try to increase the yarn prices. So which is going to be one indicator for everyone other than only the Indian markets. 2, I think MCX, since the volumes are less, I think at times it is not giving the right direction. So that may not be really a bigger indication, because that could be because of the very small volumes. That could be, misleading at times. Of course, as the volume increase, I'm sure This will also be helpful for the Indian spinners or the Indian players to hedge their position. But as of now, because of the very, very low volume, probably at times it is not giving the right position. So I think in my view, the ice would be the biggest factor to look at how the market is behaving and how the spinners across world are going to move. And whatever is happening outside, the Indian prices by and large is it's basically getting calculated from the international prices. The domestic prices as such has no relevance. By and large, whatever is happening internationally, I think the price will get converted or it will be derived in India from the international markets only.
Thank you. I think so. A very important message to all end users here. Nowadays, I'm not marketing any SMS service, but I think so. If you have a track on ICE, you can get a sense and feel of how things would be moving probably. They may not, it's not like tomorrow morning, if ICE comes down, yarn would come down, but you get a sense of feeling of where the trend could be leaving if there's a consistent fall or a consistent rise. Today, ICE is about 123 or 124. And I think so that's where the real danger lies. If ICE goes up, then despite anything happening, I feel that Indian cotton and cotton yarn, though yarn may not move as fast as ICE moves because of resistance from end users, but that would still mean that you would stay intact and probably see some upward movement. So I think so very important to keep an eye on that. People keep asking what should we see, what's important. I think so that's one important factor. MCX, of course, though, as Neeraj said, is shallow in its in liquidity, but still it is a domestic indicator which we cannot really ignore. Atul bhai, would you like to give any other thing for the end users of how they should can plan better or understand better how things could probably be moving?
Yeah, see, we have now entered into little danger zone. As on today, we can say yarn prices are very high, cotton prices are abnormally high. So we have to see our past also. We should never forget our past. We have seen in 2011-12 what is happened. Cotton price went up from 35,000 to 60,000 rupees. And as soon as there was a ban on cotton yarn export, within 15 days, cotton price has come down from 60,000 to 30,000. Yarn price, which went up to 350 rupees a kg, has come down to 160 rupees a kg. I have seen mills who were having stock of 6 to 8 months of cotton. They have lost 200 crore, 300 crore rupees in the stock of the cotton. So this situation is very dangerous situation. I will suggest for the spinning mills or even garment, everybody to go with little slow and buy hand to mouth, or you can run the spinning mill with 30 to 60 days of cotton. And same for yarn user also buy hand to mouth, because today we are at the stage we don't know what is going to happen tomorrow, what decision government is planning. When we attended the stakeholders meeting on November month, they given a warning that you may face a lot of trouble. And they given the list of the restriction. Even on 6th January meeting, what we attended from the stakeholder, they have given the list of the restriction which government is going to put on the cotton and yarn. I will tell you, MCX will shut down, NCDX will shut down. There will be a stock limit. Cotton will be brought under essential commodity. If we implement this to 4 restriction, then also if price not come down, we may put a ban on cotton export. We may ban yarn export, or we may put 10% duty. So we never know what is going to happen. Tomorrow, what will happen? If some restriction come, what market will, how that will behave. So I will suggest everybody has to play a safe game, keep yourself light and do the business. That will be my advice to everybody. Yes, Sanjay ji.
Thank you, Atul bhai, for your very candid and honest remarks.
Yeah.
As always, I think so the message is loud and clear that business we have to do. We can't stop our business. We can't stop our production. But let's keep it our stock levels, inventory levels as low as possible. Stay hand to mouth, because things are definitely very uncertain, no doubt. Uncertain not only because of the market fundamentals, and as Anupam ji said, A lot of money has been flowing in, which has gone into commodities. And we also know the news is abuzz, and even stock markets were down today that Fed is about to hike rates, which will again take out some supply from the market. So we don't know how, normally it's not an addition game. It's always a multiplication or an exponential game. So one sentiment change can make things come down more than what we predict fundamentally. Anupamji, there's one question in the chat box, which I think so you would be best to answer. Is there any major impact of Xinjiang Chinese cotton ban, which has come on US and now in Europe is also happening? Does this really mean that Indian cotton will relatively become more expensive going forward?
I don't think it's going to make a much difference, because if you see that the bulk of the Chinese production is now contained within the Xinjiang region. And for China, it is a matter of nationalism. And two, we have to recognize that China has moved up the value curve. It is no longer looking to get support from low value addition industries like textile. When a country moves up the value chain of the technological competence and the IPR profile of the industry shape, it no longer requires textile. And we have seen that in last 3 centuries, from one continent to another continent, and finally it comes to where the industries are, the countries just walking up the path of industrialization. So China is no longer in need of that. And I think India is going to be the biggest beneficiary of China vacating the space which it appropriated in last 2 decades by its central policy, which was basically export deflation and gain market share in everything that you do. So Xinjiang is not going to be relevant for either the global cotton or for Indian cotton in any meaningful way, except that India is going to see an unprecedented growth in the textile industry over the next 10 years, because China is consciously vacating the space it has monopolized over the last 2 decades.
I think so. A very important message for everyone, all of you who are from the textile industry, that it's going to be India's decade, but only for those who aggressively grab it, because in today's context, opportunities come and go very fast. What looks like an opportunity today vanishes tomorrow because of the very fast changing norms and way of working, which especially after COVID, which has accelerated. The change per se has accelerated. So I think so it's time to look at investment. It's time to look at not only within yourself, within the domestic market, because domestic market growth has certain limitations. Despite consumption boom, etc., it's still going to have a certain upward limitation. But the global market is wide open to India, and considering our base, the growth percentage can be anything. We are looking today, we have a market share of about 4% globally, 4+ now. But we could very well look within the in this end of this decade at a 10% market share, which means exponential growth. And the government has recognized this fact. And I just wanted to reiterate that on the man-made fiber side, a lot of steps have been taken, though it's a cotton panel discussion, but I think so just for the sake of the industry, because everyone today is not only a cotton player. Anti-dumping duty has gone on polyester raw material and viscose fiber. PLI is in for large-scale man-made fiber-based projects with very attractive incentives. Also, government has cleared that it's proposing that ATUF will come in a different format from next year. It's not going to be taken away. And now this is known well in advance, so people can plan. And also, even on the GST front, they're looking at somehow finding a way where cotton and man-made fiber are in the same, almost at the same level. So that man-made fiber, which is 70% of global production, while India, it's about 40%. And as Neeraj ji said, and Atul bhai also confirmed, you're going to see more and more polyester. Viscose, of course, is a small fiber coming into our consumption baskets. So we can plan accordingly, and probably they are very great opportunities. Another question, can we get quality cotton for this entire season, since farmers are holding and selling in phased manner? Atul bhai, would you like to answer that?
I think the farmers are holding around 150 lakh bales of raw cotton, what is our upcountry staff is saying that farmers are sleeping outside the house and there is a cotton inside the house everywhere. And looking to the, I can see the smile on Neeraj sir face, but it is a fact. We have 30 upcountry people staff and they say whenever we go to villages, we see farmer is in this much cold weather also, they sleep outside, but they are holding the kapas. So definitely we are going to get good quality kapas for, and this season is going to be longer season. We believe that there will be a cotton arrival up to June, July, August. Like day before yesterday in our crop committee meeting, we have seen that last 10 years arrival average we have seen that arrival average of last 10 years is 117 lakh bales. So the arrivals were earlier coming very slowly every month, 40, 50 lakh bales. And we believe this year is going to be a longer season and we'll get a good quality cotton. Yes.
Very important point. There are a lot of rumors or opinions that Indian crop is going to be considerably low. But probably it's not going to be low as expected by markets because we may have sort of undermined the sort of stock and farmer holding capacity. But it's very true at 10,000, if you get, instead of 5, you get 10, obviously your holding capacity goes up. And that also creates a fear when you have so much stock in a particular segment that when it starts selling out, we could see a big, supply push happening. There's another question by saying that with Anupamji's 6% calculation, 80,000 cotton, and of course we are now close to that. So, and will, as farmers are gaining, do you think the government would really want to take any action? I just don't want to put the panelists in any sort of a position because what the government will finally do, none of us know. But to expect what government has indicated, I've been part of those stakeholder meetings with Atulbhai. Neerajji has also been there. I think so Anupamji was also there, at least for one of the meetings. They have indicated that they are not happy with the situation. Otherwise, they wouldn't have frequent meetings at such a large scale. And also they've had a lot of small meetings also. They're not happy. They are monitoring the position. And if need, at least simple steps like import duty, which really doesn't harm anyone. And farmers already have double the gain. And maybe some tinkering with certain other things. Maybe an export tax may not happen. That may be the last step. But if something could happen, and I think so at 77 or 80,000, really, it's not really much of a gap really to say that government will still be happy. One more question. What happened in 2011-12 when cotton went up? And there is a chance to repeat the situation. As already said by our speakers, yes, such situation can happen, but the probability is low because last time the government intervened and they created an artificial barrier in the global flow. So this time probably we are not at that sort of danger point, tipping point. But Dharmendraji, what do you feel on the Fed rate hike which is coming up? Do you think this could be really escalate and see commodity sell-offs?
Well, if you add something what Anupamji mentioned, that there is so much of money flushed into the system that to reverse it is going to take a lot of more effort than just a Fed rate hike. So many of the commodities, although of course would react in general to a rate hike, but I think there is so much juice left in most of the prices that players will automatically keep fending off every attempt to cool off the prices. And if the inflation story is to be believed, that so much of flow of money has created such a inflation strategy, I think globally all the creators of this inflation would have to advocate some sort of a longer term strategy to taper it off also in a longer time span. If anybody tries to create a shock and awe out of it, I think we're gonna see major disruptions. So
I think
any
so.
immediate Fed rate hike is not going to
A big thing.
really pull off. Sanjay ji.
One more question. If ICE keeps going again, government intervention play any role to control the price? Well, friend, I can say if government really wants to do anything, they can do anything because we are in a global trade. And if they put any ban or put in export duty, whatever ICE happens, definitely they can bridle in and rein in prices, definitely, if they really want to take that extreme step. But that extreme step also reminds us of 2011-12, as said by our panelists. It could definitely, when you unwind that, if you put a dam, when water is flowing fast, whenever that dam is taken away, if not gradually, it definitely leads to floods somewhere down in the plains. So we'll take one last question. How strong is the demand from Bangladesh? Because at every new level, there's a consistent demand from Bangladesh. I love if Dharmender ji can answer that. Basically, they want to know how strong is the demand from Bangladesh and will it stay at that level? I think so. We've lost Dharmender ji. Neeraj ji, would you like to answer it, please?
Yeah, so the demand from Bangladesh continues to be good, and at every level they've been buying without waiting for the inflection or the peak to come in. So since their government orders are good, so at every level they've been buying irrespective of the price. And going by,
sorry, Sanjay, I think
It's okay, no problem.
So yeah, I think going by the overall growth of their garmenting, they are continuing buying even today also.
So Bangladesh definitely would keep buying, and I think so they're an extension. Before we wind up, I have one last 1 minute round where we will ask each panelist to give their last message to the user industry of what they feel in one or two lines for the future. We'll start with Anupam ji.
Thank you, Sanjay. I have a very simple point of view to share. See, the textile industry has always been monopolized by low per capita countries, and China has gone beyond $10,000 per capita income, and India is still stuck below $2,000. So when a country vacates because it has moved up the per capita income, whatever may be their Gini coefficient, it is an opportunity for low income per capita countries to grab that opportunity. And it should not be based on any support or any kind of a kid gloving from the government or at the cost of one component of value chain to protect their own gains. So I think they need to learn the new tools of the trade, like for example, price indexed offer of produce rather than selling fixed price, engaging into communication, whether the cotton component will be benchmarked to ICE or MCX or spot prices. So something of that sort they have to think, and they need to build their businesses around productivity, efficiency, and innovation rather than at the cost of one component of value chain, which is Indian farmer.
Thank you, Anupam ji. I think so. The message is loud and clear. Dharmender ji.
Well, yes, an extension of what Anupam ji says. At the same time, the domestic market is poised at, I would say, a crossing point or a tipping point where the increase in buying capacity refocused into basic necessities after this pandemic is creating unique opportunities. And if the industry really needs to grow here on, all the garmenters, end users, end application producers, I would encourage to move forward and expand the capacities and take advantage of scale, higher scale of operations. And rather than expecting that no, we will continue to have lower raw material prices and only then our industry would survive, should be converted into an opportunity that the demand is going to take care of the rest. Cotton is growing in prices because there is demand. Yarn the same way, and the next in value chain is fabric and garments. So simply we need to seize this opportunity and take that #1 spot globally as a producer.
Thank you. Thank you for reinforcing and giving more confidence to the audience. Atul Bhai,
Yeah.
one last word from you.
Yeah, last word. You see, today there was my interview on CNBC for budget special. What I have given suggestion, our demand, #1 demand was to duty to be removed, input duty. And then I have suggested that government of India has to allocate big amount for new technology of the seed, which is the need of our, for cotton growing farmer. As our BT seed technology is very, very old and not able to sustain against the attack of pink bollworms and other worms. Due to this, our yield is less. Our yield is around 475 kg against average world yield is 800 kg. Our last 5 years production is standstill around 350 lakh bales. Our consumption is going up every, as Neeraj ji said, 10 lakh bales are new spindleage are coming up. So if we get new technology of the seeds, we can increase our yield and our production can go up to 500 lakh bales also with the new technology if new seed has been introduced. I remember when the BT seed was introduced, our Indian crop size was only 100 lakh bales and suddenly we have seen within 2 years jump of 200%, and the quality of the cotton has improved, which has helped to the textile industry, everything. So this is my view that if we, for entire textile value chain should come together, spinning mills, traders, ginners, farmers, everybody, and we should put a pressure on government that they should allow to bring new technology of the seed, which is need of this hour. Yes, Sanjay ji.
Thank you, Atul Bhai. I request whoever in the audience are office bearers of any association, whether it's garments, fabric, yarn, cotton, etc., to please in one voice, let's request the government through all communication channels that we need better and more modern cotton seeds.
Yes.
Immediately ASAP. We don't have time. We've already lost a lot of time.
Correct.
Last 1 decade, we've actually seen a decline in cotton production, and we need to stem that immediately. Otherwise, we obviously are going to be in big trouble, and we'll probably otherwise have to graduate to being more a polyester consumption economy. Now, last to Neeraj ji, I know you do a lot of analysis, a lot of research, Neeraj ji. Any areas you would like to highlight, any advice for the industry which they can follow up on?
In medium long term, I think it's an egg or a chicken story today where every brand is looking at China plus one story. But when they can give us a first right of refusal, but when they come here, they want a quantities, they'll not be giving us a premium for sure, but they can give us a quantity, they can give us a first right. But once they do not get the capacities, probably at that stage, they are forced to go back to either to Bangladesh, to the other countries, because they are not getting those capacities. The Indian garmenter position is, since we do not have sufficient orders or we do not have consistent business or the margins are less, probably the new capacities are not coming in. If China is vacating that space, I think Bangladesh, it's a matter of time. The LDC advantage will also be over in the next 2-3 years. But I think even after that, they are going to create a huge competitive advantage going forward because of the capacity they have created. Unless India, both on the knitting fabric side and on the garmenting side, we create capacities where we can fulfill the demand of these brands, will not be in a position to take full advantage of this situation. So I think one idea is how do we create those capacities where a customer wants to come in, and it's not only, should not be only 1 or 2 players, but if there are 15, 20, 50 players, their confidence would improve and they come back to India. That's on the medium and the long-term side. On the immediate side, it's anyone's idea where the prices will be crashing or what is the inflection point or what is the highest price. So I think let's keep on floating with the water, keep on buying on a week-to-week basis rather than looking at that things will crash and then only will buying. It's anyone's idea. The prices go increase by another 5,000, 10,000 rupees a candy in cotton or another 10, 20, 30 rupees kg in yarn, because nobody is aware of that. So my idea is we are also buying cotton on a day-to-day basis, same irrespective of loss or profit, at least we have to keep floating. Same way, my suggestion to all the users would be, rather than waiting the prices to get crashed, they should continue to buy on a week-to-week basis so that if the prices goes down, they take advantage of that by buying further. If the prices goes up, at least they have covered something, rather than looking at an extreme thing that things will come down and then only will buy. That may or may not happen, or anyone's guess when does it happen. I think these are the two ideas which I will suggest to the industry to look at it.
Thank you, Neeraj-ji. Thank you to everyone who's here on this Zoom conference, and also the people who are seeing it as it's being live streamed on social media of ICC. To everyone who's hearing us now or would be hearing us in the future by seeing the recorded version. I think so. I'll summarize very quickly in a few lines. Firstly, we should keep buying as and when we need on a consistent basis. We don't need to create more inventory to take advantage, but we should not just close our eyes and keep waiting, because finally we only make profits when we sell whatever we are selling. And we have the summer season coming up. If we totally close down and stop buying, probably we're going to miss the opportunity when peak season starts from March onwards, March to June, of finally having the required quantity of goods available with us. Secondly, India today is having a great opportunity to occupy part of the space of what China is very clearly has already started vacating and will keep vacating. How to take advantage? We need to take some aggressive steps. We need to be a bit bold and stretch ourselves a bit by stepping up capacities in areas where we are strong. If you're good in garmenting, probably increase go gradually, but increase your capacity while you also increase your marketing. And it's very important to create channels of export marketing. For that, you need to have state-of-the-art factories, fully compliant factories. So those who have this aspiration of going big, who have this aspiration of creating world-class capacities, should start looking, because it's now or never. If we miss this decade bus, we probably will then not have this great opportunity window. And Bangladesh, as Neeraj-ji said, would also probably lead to some, and the whole advantage could probably shift somewhere else. Maybe Africa, we don't know, maybe some portions of Africa. But of course, it's all guess on how those countries evolve. But today is our opportunity. Friends, let's take advantage. We have a thumbs up from the government of India, who's very aggressive on textile and clothing industry in the coming years. We have a very good global traction. A lot of people are looking at us. Let's take advantage of it. And I know it is worrisome to have such high, fast, steep price rises. But as they say, once in a decade, it always does happen. Anytime you see once in a decade, you are going to be jolted out. There will be some reaction, but then you will definitely settle at a much higher base. But look at we all carry inventory. So we are also somewhere or the other booking profits of inventory, which we held for years. This is the right time to sell them at a higher price, flush them out, and become more slim and trim on our inventory, on our godowns, probably reduce the godown space. This is the right time for it, because with so many pressures all around. So once again, on behalf of ICC, I thank you all. A special thank to all the 4 panelists who have been very open and honest, irrespective of the business they do, irrespective of their personal interests. They've been very, very open and honest to all of us. Let's go with this advice and, of course, build our own futures. So, Shmita, you'd like to say anything?
Thank you so much, Mr. Jain, for your concluding remarks. And as we can understand from the participants, that the panel was very much, well appreciated. Thank you, Neeraj-ji, Atul-ji, Anupam-ji, and Dharmendra-ji. Thanks all, and of course, Sanjay-ji. And before we sign off, we like to request all our participants, if you have any questions further, please do write back to us so that we can place it, before our esteemed panelists. Thank you so much.
Thank
Have
you,
a great
and
evening.
have a happy evening. Thank you.
Thank you. Thanks.